All right, hello everybody. Welcome. I'm Matt Garrett, founder and CEO of TGG Accounting. And today we are going to try to answer the question of what are retained earnings and how do they affect the net equity of the business? And maybe what is net equity? Before we get started, make sure you click on the subscribe button. And if you're on YouTube, click on the alert notification so you can be notified when we post new videos. Okay, so today we're going to talk about this weird concept called retained earnings. It just sounds like a strange word. What I want you to do when you're thinking about accounting words is take all the strange stuff and throw it out your brain. This isn't English. This is accounting, which means everything is incredibly basic and exactly as it sounds. Retained earnings are earnings that you retain in the company. Mind-blowing, I know. It's one of these weird things where if you make money in the business and you keep it in the business, you have retained earnings. So if I have earnings, meaning I have profits, and I keep them in the company, I have retained earnings. Now, what does that mean for the safety of the business? Well, it's just like at home, if you make more money than you spend, that's net income to you, and you keep it in a bank account, you're earning savings, aren't you? Your business, your life is getting safer. The same thing's happening in your business. The more you have retained earnings, the safer your business is getting. And the more you have retained earnings, it's directly affecting equity, isn't it? Because your equity, just like the equity in your house, where it's the stuff that's, what it's worth minus the loan that you have on it, business, it's the same way. So retained earnings builds, your equity builds. And what does that mean for you and your business? That means your business is getting safer. That means your business can withstand a recession. That means you're starting to build cash. That means you're starting to build opportunity cash that you can actually go and buy things when they get cheaper, recruit more people, invest in technology, get more effective and efficient. So retained earnings or earnings that you keep in the business is effectively a business way of saying savings. And what that does is increases the equity or increases the safety in the business, increases the financial strength in the company. And that allows you to go do all kinds of other fun stuff to put that cash to work, to go out and meet your goals, ultimately invest in things, hire new people, build new technologies, buy new businesses, all of that kind of stuff, which again, it's the same as your personal life. So don't get all bogged down in this retained earnings word or equity word. They're not very complicated when you break them down. Retained earnings are earnings you keep in the company. Just the same as when you keep money in your bank account at the end of the month because you spent less money than you made. It's exactly the same thing. And all it means when it comes to equity is you're getting safer and financially a little stronger.